We'll begin revising which one? Amalgamation chapter. Before we start, there are two types of amalgamation. One is which one? The nature of merger, another one is in the nature of purchase. The nature of purchase, we also call it as which one? Absorption or acquisitions like that. Okay. So, for example, A Limited taking over the business of B Limited can be in the nature of merger or can be in the nature of what? Purchase or absorption. If it is to be a merger, there are certain conditions to be fulfilled. What are the conditions to be fulfilled? All assets and liability should be taken over at what value? Book value. All assets and liability can be recorded at book value, and all assets of selling company, liabilities of selling company must be taken over by which company? Purchasing company. Even if one liability is paid, that is not merger. Then purchase consideration pay should be paid only in the form of which one? Shares. Minimum 90% of shareholders in selling company should agree to become what? Shareholders in purchasing company. Then business of subsidiary company, the selling company should be continued. Only when all these 5 conditions are fulfilled, we call it as which one? Merger. Okay. What is the purchase consideration? As per AS 14, amount payable by the purchasing company to the selling company, okay, to the shareholders, equity shareholders plus preference shareholders plus arrears of dividend if any, only this much should be taken as purchase consideration. When you are discharging debenture holders, when you are discharging creditors, when you are discharging other liabilities, that should not be taken as what? Purchase consideration. What is purchase consideration? Amount payable by the purchaser to whom? The seller. Okay. Anything that is paid to the owners of the selling company. Who are the owners? Shareholders. It includes preference shareholders also. For example, purchase consideration is paid in the form of cash. Then it will be called as the nature of which one? Purchase. Which one you will take? Whatever is paid to equity shareholders, preference shareholders, plus what? The arrears of dividend, if any, you can take it. Then, how to calculate purchase consideration? It can be based on market price. Okay, market price of the seller divided by market price of the buyer into number of shares. For example, your market price is 400, my market price is 200, means I will give you 2 shares for every 1 share. If there are 1 lakh shares, I will give you 2 lakh shares. Okay. Suppose if the market value of the seller is 100, market price of the buyer is 200. For every 1 share in your company, I'll allot what? 0.5 shares like that. Lump sum method, the purchase consideration will be given in the question itself. Okay. Sometimes they will give you how much is paid. How much is paid is the total of amount payable to whom? Equity and preference shareholders. Do not include consideration payable for which one? External liabilities like debentures, creditors, loans, expenses, and other things. If these things are not clear, then we'll go for which method? Net assets method, where suppose if they tell you the amount due is paid or amount payable to equity shareholders is paid like that, if it is given, then we'll go for which method? Net assets method. If payments are not clear, if the amount is not clear, then go by which method? Assets minus liabilities will give us net assets. Net assets will be the purchase consideration. Okay. So intrinsic value, simple. It's an extension of net assets method. Net assets divided by number of equity shares will give us what? Intrinsic value. Then the shares can be allotted based on intrinsic value. Okay, these are the methods in which we work out what? Purchase consideration. If they tell that shares are exchanged based on market price, go for the first method. If they tell that the shares are allotted with the lump sum amount like 5 crore, 10 crore, go for the second method. If they give you how much is paid for equity shareholders, preference shareholders like that separately given, go for which method? Net payment method. If the payments are not clear, then go with which one? Net assets method. Extension of net assets method will give us what is the value of the shares of the company. Based on that, the shares can be allotted. Done. So how to identify in a question, is it merger or purchase? How to identify in a question? Is it a merger or purchase? Depends on whether the conditions are satisfied or not. You look at the journal entry between merger and purchase will be different. First entry will be same. What is the first entry? Business purchase to liquidator of selling company. That is common for both merger and what? Purchase. For the assets and liabilities taken over, merger everything will be taken over at what? Book value. Please remember, land, building, plant, machinery, or data, stock, everything. Even miscellaneous expenses like preliminary expenses will be taken over at what value? Book value. All external liabilities, reserves and surplus, even reserves and surplus will be taken over at book value to business purchase. The balancing for will become which one? General reserve in case of merger. In case of purchase, we will take over only assets at what value? Revised value, market value, all your fixed assets and current assets. Miscellaneous expenditures in merger only it will be taken over. In purchase, it will not be taken over because they will not have a value. We will take over only which value? Which one? External liabilities at what value? Revised value. Resource and surplus of selling company will not be taken over because we are just absorbing assets and which one? Liabilities only. Miscellaneous expenses and reserves of selling company are not to be taken over. The balancing for will be either goodwill or which one? Capital reserve. So major difference comes in the second entry. Please go through this. If it is merger, all assets, all assets. For example, let us assume it is not a merger problem. Okay, all assets at what value? Book value, fixed assets, current assets, trade receivables, cash and bank, everything will be taken over at what value? Book value. Okay, and the liabilities. What do you mean by liabilities? Trade receivables, even P&L account will be taken over at what value? Book value. That is merger. The balancing for will be what? A general reserve. But in case of purchase, we will take over assets at what value? Absorption, revised value. Then external liabilities only will be taken over. Don't take over which one? Miscellaneous expenses. Reserves and surplus of selling company will not be taken over. Capital reserve will become a balancing for, or goodwill will become a balancing. Then settlement of purchase consideration, same entry will come. Liquidator of selling company account data to whatever is given. Even in merger, for fractional shareholders, if it is coming to 2.75 shares, we cannot give 0.75 shares. That time what we can do? We can give it in cash. Then any doubt in it? Any doubt in it? Because second entry is what you have to observe a lot. Merger na everything at book value. Here, assets which are having some value, that is revised value, which will be taken over. Okay. External liabilities as well as reserves are taken here. Only external liabilities will be taken over at what value? Revised value. In purchase, we will not take over reserves and miscellaneous expense of which company? Selling company, because when you purchase a business, you are purchasing only what? Assets and liabilities. The balancing for, if you pay more goodwill, if you pay less, it is capital reserve. That's it. No, general reserve will be taken as a balancing. We will take over all P&L account, securities premium, all capital reserve, all the other reserves. General reserve alone will be taken like a stock absorber, balancing. Here, no such issue. The balancing for either becomes goodwill or which one? Capital reserve. Settlement of purchase consideration, same. Sometimes you have to maintain selling companies' reserves. Why? Certain reserves are statutory in nature or compulsory in nature. To maintain such reserves, no entry is required because it is automatically maintained. Second entry partner, we take over which one? Infrastructure development reserve or statutory reserve, we will take over. It is automatically maintained, so no need to pass any journal entry. But in purchase, reserves and surplus are not taken over. So we create a separate entry called as what? Amalgamation adjustment account data to which account? Statutory reserve account. Suppose if liquidation expense of selling company is borne by the purchasing company, liquidation expense of which company? Selling company borne by which company? Purchasing company. Now what will you do? Simple. It will be adjusted with which account? General reserve account, data to cash or bank. Here, which one is becoming a balancing figure or shock absorber? Goodwill or capital reserve? We'll adjust with goodwill account, data to which account? Cash or bank. Suppose in the first entry, if the gap is capital reserve, we'll adjust with which one? Capital reserve. Goodwill or capital reserve account, data to which account? Cash or bank account. Like that, we will pass. Then come to this question. P Limited and Q Limited were carrying on the business of manufacturing auto parts. I request you to read the question. The- Hello. Hello. Collect பண்ணிட்டாங்களா? தெரியலையே, அவன் கிளம்புறான்னு தெரியல. வெளில வச்சிருந்தேன். சும்மா. சரி. சும்மா ஒரு கவர்ல போட்டு. Read the question in full, then we will solve. New company called, which company will be formed? EQ Limited will be formed. I request you to go to the adjustments especially. Read the adjustments especially. We are given the book value of assets. Assets are taken over at book value. No, except the items detailed below. Goodwill is revalued, furniture is revalued, okay, debtors is revalued, debentures are changed. Is it merger or purchase? Is it purchase or merger? Purchase. It's going to be what? Purchase. Amalgamation nature of purchase. How to pay the purchase consideration? It is given. Um, Issued at part to the shareholders of existing companies. We are not given clearly how the purchase consideration is discharged. So we will pay by which method? Net assets method. Assets minus liabilities. Start. Amalgamation in the nature of purchase. Purchase consideration by which method? So let us work out for P limited and which one? Q limited. For examination point of view, do not do this. Balance sheet you have to prepare properly. Total will become balance sheet for which company? They don't ask journal entry. They don't ask journal entry ego. Check is the journal entry tested? Only in the books of selling company they ask journal entry. Journal entry is asked in the books of which company? P limited to close. Okay. PQ limited balance sheet only they ask for. They don't ask any journal entry, so we can directly do that. Start. Assets taken over. Balance sheet, it will come as, of course, assets. What are the assets? Goodwill, revised value. Take the revised value of goodwill. What is the goodwill value? 50,000. Q limited. So total will come for balance sheet. Then furniture and fixtures. Any revised value given? Furniture and fixtures. P limited 0. Q limited. Wherever revised value is given, take the revised value. Then what is the next one? Plant and machinery. Q limited. Then building. No revised value. Then which asset next? Inventories. I hope same book value. 1,35,000. Then 44,000. 1,42,000. Then cash at bank. Look at this. Debtors of P Limited are realized fully. Bank balance of P Limited are to be retained by liquidator ன்னு கொடுத்திருக்கோம். And sundry creditors are paid out of the proceeds thereof ன்னு கொடுத்திருக்கோம். So what to do? Trade debtors of P Limited are realized fully and bank balance of P Limited are to be retained by liquidator and sundry creditors are paid out of proceeds thereof ன்னு கொடுத்திருக்கோம். So trade receivables are not taken over by the purchasing company. It is left to the liquidator of selling company. It is simple. Debtors you collect, bank balance you retain. With that you pay the creditors, which means purchasing company is not taking over what? Purchasing company is not taking over debtors, bank balance, and which one? Creditors. Who's taking care of paying? Look at the sentence once again. Liquidator is taking care of paying. Look at this. Debtors of P Limited realized fully. That means liquidator realizes it. Bank balance of P Limited is retained by liquidator and sundry creditors are paid with the proceeds thereof means, okay, the liquidator is taking care. So cash and bank is not taken over. For the other company, it is 58,000. Total 58,000 will come. This is total of assets for your balance sheet also. Then, what are the liabilities taken over? Debentures of P Limited are to be discharged by the issue of 8% debentures in PQ Limited at a premium of what? 10%. Look at the debentures of P Limited. Debentures of P Limited, how much is it? We are going to pay at a premium of 10%. So, 8% debentures at a premium of 10%. How much it will be? 1,21,000. There is no debenture with other company. 1,21,000. Then trade payables. P Limited will not be taken over because they collected trade receivables, cash and bank they retain. With that, they have to take care of paying which one? Trade payables. So that is not taken over by the purchasing company. The other one, 1,40,000. So this is the total of liabilities taken over. So net assets become which one? Purchase consideration, that becomes share capital. So when you prepare balance sheet, this furniture, building, plant and machinery will come as which one? Tangible assets. Non-current asset la PPE. Tangible assets vandrum. Goodwill will come under which one? Intangible assets. Inventory, trade receivable, cash and bank balance will come as which one? Current assets. Then debentures will come under which one? Long-term borrowings. Trade payable will come under current liabilities. Of course, this will become which one? Share capital. The examination, they expect you to prepare the balance sheet. So please do that fully. Any doubt in this? Any doubt in this? Assets minus liabilities becomes which one? Net assets, that becomes purchase consideration, that becomes share capital. So share capital 7,54,000, long-term borrowing 1,21,000, trade payable 1,40,000. Inventory, trade receivable, cash and cash equivalents, current asset lo vandirum. Furniture, plant and machinery and building will come under which one? Plant, property, equipment, tangible assets. Goodwill will come as which one? Intangible assets, and you can close. In the books of which company they ask for? P Limited, that is selling company, they ask you. Okay, I'll come to that later. We'll prepare ledger accounts. Okay, I'll come to the selling companies part later. So leave a page gap. Leave a page gap. I'll come back to it later after doing some problems in which company? Purchasing company. Any doubt in this? Any doubt in this? For selling company, we'll prepare which account? Realization account. Then we'll prepare purchasing company account, PQ Limited account. And we'll prepare which account? Equity shareholders account. No preference shareholders in this question. We'll prepare equity shareholders account. This part, I'll come to that later. For that, I request you to leave one page gap. Leave one page gap for preparing realization account, PQ Limited account, and which one? Equity shareholders account. Let me revise selling companies books and come to it. Journal கேட்டிருக்காங்க. Without doing ledger, we cannot do journal because we want profit or loss and realization. Without knowing profit or loss and realization, how to close which account? Equity shareholders account. So we need to prepare ledgers. Then based on that, I'll tell you how to pass journal entry. It is simple to pass journal entry, but leave a page gap. Let me to come to selling companies division separate. Any doubt in question number one? If you look at in the exam, it appears like a big question. Page number 1, page number 2, then adjustments, pata. It's a big question. It may be tested for 10 marks. Okay, but answer is very, very simple. Assets minus liabilities gives us which one? Net assets. Apart from this, you have to do one more answer. What is the answer? That balance sheet you have to prepare. Proper balance sheet you have to prepare. Shall we? So for selling company, please leave a page gap. Live online, friends. Have you copied it? Shall we proceed? Read the second question. Balance sheet of Srishti Limited is given. Then Anu Limited agrees to absorb the business of which company? Srishti Limited with effect from 1st April 2014 is given. Purchase consideration is settled by Anu Limited as agreed கொடுத்திருக்காங்க. Then 4,50,000 equity shares of 10 each is given. Cash payment 2.5 is given for every share. Whether the payment is very clear? Yes. Payments to equity shareholders are very, very clearly given. How many shares are allotted? How much cash is paid? Both are given to us. Okay? Which method? Net payment method. Purchase net payment method. Since cash consideration is involved, it is amalgamation in the nature of what? Purchase. So debenture holders are paid at 96%, but we are going to pay the premium at what? 20%. We are going to pay them at 20%, but we are allotting our debentures at 96%. You have to see this. Tangible assets 100% more than the book value. Stock at 7,10,000, debtors at face value, subject to a provision of doubtful debts is given. Cost of liquidation has to be reimbursed by what? Anu Limited to the extent of what? 50,000. Purchasing company bears what? Selling company's liquidation expenses. Statutory reserve has to be maintained for 1 more year. I told you the selling company will come to that later. In the books of purchasing company, they ask you to pass journal entry. For in the books of which company? Purchasing company. Selling company, yes, we'll come to this. The books of selling company, these ledger accounts, we'll do that. Okay. The books of who's the selling company? Limited account. We'll come to that later. For that, leave one page gap. Start. In the books of which company? Anu Limited. Amalgamation. The nature of purchase. Amalgamation in the nature of purchase. Purchase consideration. Which method? Net payment method. Equity shares. How many equity shares are given? 4,50,000 equity shares into 15. It's issued at 15 rupees. Then cash payment. How much cash payment? 30 lakhs divided by 10. 3 lakh shares are there. We have to pay 2.5. 7,50,000 we need to pay. This is the total consideration. What is the journal entry you will pass? Business purchase account data to liquidator of Srishti Limited. Pass the entry along with me, don't wait. 7,75 lakhs. In the exam, you have to give narration. Unless otherwise they say no narration required, you must pass which one? With narration only. Next, for the assets and liabilities taken over. What is the entry you will pass? Tangible fixed assets account data. It is revalued at how much? 100% more than the book value. Book value 30 lakhs, so it is taken over at what? 60 lakhs. Then stock account data, which value? Same book value or revised value, 7,10,000 given. Then debtors account debit minus எவ்வளவு percent provision? Debtors account debit after adjusting minus 5%. Or you can show provision for bad debt separately also. Debtors account debit to provision for bad debts also you can do. Debtors account minus 5%. 1,80,000 minus 5% will be 1,71,000. Then debtors account debit over. Then cash or bank account debit. How much? 2,80,000. It is purchase. Will you take over preliminary expenses? If it would have been a merger, we would have taken a preliminary expense also. Leave a line gap that may be goodwill or capital reserve. 2. What is the thing? Debentures. As of now, let us record 9 lakhs. As of now, let us record 9 lakhs. How we are settling, we will see that later. As of now, let us record 9 lakhs. Then, sorry, check the total. Check the total of the balance sheet. So, I mean, it was a past exam question paper. Yeah, we are paying at a premium of 20%. It will be 5 lakhs plus 20%, 6 lakhs. 5 lakhs plus 20%, it is 6 lakhs. Then, what else will come? Creditors. Creditors how much? 1 lakh. Creditors 1 lakh. Then, business purchase. Business purchase 75 lakhs. Balancing for, check, is it goodwill or capital reserve? I hope goodwill will come. Ten lakh 39,000 goodwill. Then we are settling the purchase consideration. What is entry will pass? Liquidator of selling company account data. Liquidator of selling company account data. How much? 75 lakhs you have to pay. To equity share capital, hand out it to me. To equity share capital, face value only will be recorded. 4 lakhs into 10. 4 lakhs into 10, how much? 40 lakhs will come. To securities premium. To securities premium, 4 lakhs into 5. 4 lakhs into 5, 20 lakhs. To cash, how much we are paying? To cash, how much we are paying? 7 lakh 50,000 we are paying. Then, these are the base 3 entries. What are the additional entries that will come? Statutory reserves have to be maintained for 1 more year. For that, what we will do? Amalgamation adjustment account data. To export profit reserve account. Amalgamation adjustment account data to export profit reserve account. How much? 8 lakh 50,000. Then it's not over. Liquidation expenses. How much is there for the selling company? 75,000. But we are not paying in full. But we are agreeing to pay only 50,000. If liquidation expense of selling company are borne by the purchasing company, na, in case of purchase, we'll adjust with goodwill or capital reserve. In case of merger, na, we'll adjust with which one? General reserve. So goodwill account data to cash or bank. How much we agree to pay? Only 50,000 will come in our books. In the exam, please, if nothing is asked, you must write which one? Narration. Now, this debenture holders, debenture holders, are they settled at par value? No. Amount due for debenture holders. Amount due for debenture holders, how much? 6 lakhs. Are we giving at 100 rupees? No, we are giving at what? We are giving at 96. We are giving at what? 96. How much you have to pay? Debentures account debtor for the old debentures. What is your obligation? How much? 6 lakhs. You are giving our debenture. What is a debenture? 9% debentures. Okay, sorry, 8% debentures. How much value? What is the discount on issue? We are allotting debentures at what? 96. So what would have been the face value? Face value would have been 6 lakhs into 100 by 96. How 100 by 96? If 6 lakhs is discharged at 96, what is the face value? 6 lakhs 25,000 is the face value. So to debentures 6 lakhs 25,000 face value we give. Discount on debentures will be 25,000. Otherwise, you can work out like this also. 6 lakhs divided by 96. How many debentures to be given? 6 lakhs by 96. 6250 debentures to be given. So which is 6250 into 100. This is a discount of 4. 6250 into what? 4. Like this also you can work out. First work out number of debentures to be allotted. Then based on that you allot the debentures. So I repeat the whole process. Purchase consideration in the form of equity shares and cash payment. Then business purchase to liquidator of selling company. We take over all assets and liabilities at revised value. So it is purchase. So debit, goodwill, balancing figure. Liquidator of selling company to whatever is given. Capital with premium, cash. Since we have to maintain the selling company reserves, amalgamation adjustment account data to which one? Export profit reserve. We bear a part of liquidation expense of selling company, goodwill account data to bank. Then we are issuing debentures. We have to pay 6 lakhs, but he allotted at 96 means we have to give what? 6,250 debentures at 100. The balance is what? Discount on issue of debentures. As I told you, I will come to the selling company later. The books of selling company, we'll come to that after solving one more question or two more questions like that. Any doubt in it? Shall we? Please leave one page gap for selling company. The books of selling company, I'll come to the realization account separate. Requesting you to go through the third question. After copying this, please read the full question, especially the adjustment. Two companies are given. They want to merge in the form of which one? Abhilasha Limited கொடுத்திருக்காங்க on 1/4/2015. Goodwill we have to value based on what? 2 years purchase of super profit. Normal rate of return, combined capital of reserve is given. All other reserves are ignored for the purpose of goodwill. Average profit is given to us. Land and building, plant and machinery, both the companies are valued at 10% above the book value. Provision 10% for debtors is given to us. Then debentures to be redeemed by the issue of what? Preference shares. Debentures to be issued by the issue of preference shares. Creditors are taken over at book value. There is an unrecorded liability of Asha Limited, 15,000. How much is given? 15,500 is given. Bank balance of both the companies are to be taken over to be by Abhilasha Limited after deducting liquidation expenses to be borne by Abhay and Asha in the ratio of what? 2:1, which means 60,000 left. First company should bear 40,000, second company should bear what? 20,000 on the mark. Okay. Compute the basis on which shares will be given. Draw the balance sheet after amalgamation like that they have asked for. Read the adjustments especially carefully, then we'll work out. How to value the goodwill? So the valuation problem and all we have not seen, but in the CA exams they can ask how to value goodwill. 2 years purchase of super profit. What do you mean by super profit? Whatever is earned more than the normal profit, more than the normal profit. What is how to calculate normal rate of return? 10% of combined capital and which one? Reserves. Okay. This is question number 3. Amalgamation. First, let us value the goodwill and proceed. Start. What is the average profit given? What is the average profit given in the question? 2,75,000. And please do it along with me. We not wait. 1,75,000. Then, how to work out normal profit? 10% of share capital plus general reserve. 10% of share capital plus general reserve. Share capital plus general reserve. 15 lakhs plus 2,75,000 into 10%. How much? For the other company, 10 lakh plus 1,25,000. 10 lakh plus 1,25,000 into 10%. So difference will give a super profit. So based on that, we have to value the goodwill. Goodwill, how to value super profit into how many years? 2 years. Super profit into 2 years purchase of super profit. 97,500 into 2 years. 97,500 into 2 years. Then we can add other assets. It will come in the balance sheet also. So add up all the other assets minus liabilities. will give us net assets, that is purchase consideration. Try பண்ணுங்க. We are going to work out the complete purchase consideration. Correct. So complete all the other assets and liabilities. Add up all the other assets minus liabilities, it will give you what? Net assets. That is purchase consideration. Try பண்ணுங்க. Debtors are taken at book value. எவ்வளவு percentage? In bank balance after deducting on the 40,000 and 20,000. It's given 60,000 to be borne in 2:1 ratio. Deduct 40,000 and 20,000 and take it. What about land and building, plant and machinery? Are they taken at book value or more than the book? You work out, then tell me the values. One lakh plus 1,25,000. Oh, 10 lakh capital. Okay, correct. What is the land and building value? Debtors after eliminating 10%. Minus 10%. Bank balance after deducting 40,000 and 20,000. After deducting that 40,000. Huh? This will give us total of assets. Less creditors. Creditors எவ்வளவு இருக்காங்க பாருங்க. First company 55,000. Second company 55. Then unrecorded liability. How much? Then any debentures, etc. Debentures also. Like 75,000. If you prepare the balance sheet, this land and building, plant and machinery will come as which one? Tangible fixed assets. Goodwill will come as intangible asset. Inventory, debtors, bank balance will come under current assets. The creditors, of course, trade payable on the liability also. Debentures will come under which one? Long-term borrowing. The purchase consideration will become which one? Share capital. Number of shares. You want number of shares? This divided by, we are issuing at 100 rupees. And right? This debentures also will become preference share capital. This debentures, the new balance sheet, will be recorded as which one? Preference share capital. Debentures are given with preference shares. So in the new balance sheet, it will be coming as which one? Preference share capital. Share capital, what will come? This purchase consideration and which one? Both will come. Then director, current liability. Current liability, the trade payable will come. This creditors and liability. Asset side, non-current assets. Land, property, equipment, tangible assets. Tangible assets, this land and building plus plant and machinery will come. Intangible asset like goodwill will come. Current asset like inventory will come. Then trade receivables, cash and cash equivalents. So please do it in a proper form in the exam. One. See, they don't ask you in the books of selling company. They ask you in the books of which one? Purchasing company only. We'll do question number 4. Then we'll come to which company? Selling company. Read, try to work out purchase consideration. First 3 questions I was working along with you. Fourth question, you are going to try which one? Purchase consideration. Then I'll check the answer. Then we'll go for journal entry. Then we'll be preparing balance sheet. We'll be preparing the balance sheet. Try பண்ணுங்க. Because it is amalgamation in the nature of purchase. So we will not take over what? Reserves and surplus. Purchasing company records only these assets and liabilities. Live online friends. Have we copied this question number 3? Okay. Try that question number 4, purchase consideration first. Question number 4 ல என்ன method use பண்ணுவீங்க? Which method for purchase consideration? We are given revalued assets and liabilities. The compute basis on which shares will be given like that they asked for, which means which method? Net assets method, net assets method. Try பண்ணுங்க பார்க்கலாம். Assets minus liabilities will give us purchase consideration. What is the name of the company? A Limited, and which one? One lakh 40,000 and B Limited 40,000. Freehold property. Then debentures. How much you get? This will become share capital of new company. Of course, these three assets will come as tangible fixed assets. Goodwill, of course, intangible asset. All these things will come. Do they ask you to pass journal entry? Yes. Please pass separate entry. Don't combine and pass. For A Limited separate entry, B Limited separate entry. Try பண்ணுங்க. Business purchase of pound data to liquidator of A Limited. How much? 8 lakh 70. Oh, the books are AB Limited, no? Purchasing income 8 lakhs. Then assets. Example, don't do short forms. The separate entry தான் pass பண்ணு. Don't combine. A limited க்கு 3 entries, B limited க்கு 3 entries தான் pass பண்ணு. Don't combine. Because இந்த ப்ராப்ளத்துல ரெண்டுமே goodwill தான். Sometimes ஒரு கம்பெனில goodwill இருக்கலாம், another company there may be captive loss. அதனால don't combine. Same set of entries, 3 more entries you pass for which company? Acquiring B limited. This is for acquiring A limited. 3 entries you pass for acquiring B limited. You don't ask selling company, leave it. After this, read and understand question number 5, we will solve. That requires a deeper understanding before we solve. After that, then we'll move to which company? Selling company. After question number 5, we'll move to which company? Selling company. Okay, selling company standard 4 ledger accounts. So we'll start that question number 5 as a base for which company? Selling company, because a lot of entries are there into the books of selling company. So try to pass 3 more entries or 3 set of entries for acquiring which company? B Limited. Same business purchase to liquidator of B Limited. B Limited, how much will come? 3,84,000. Then same assets and liabilities taken over entry pass. Will not come. But both are separate acquisitions. You have to do it separately. One. That is what is recommended to your suggested answer. As well as both are acquired separately. We follow them. Two separate transactions. Shall we? Fifth question, one of the lengthy question that was tested in the past examination. Read. Balance sheet of which company is given? A Limited, then balance sheet of B Limited is given. Look at that. AB Limited with an authorized capital 36 lakhs. That is 60,000 preference shares and 3 lakh equity shares of 10 each is given. A Limited will purchase, AB Limited will purchase whole of assets of which company? A Limited, except what? Cash and bank balance for rupees 28 lakh 25,000 to be settled in 5 lakh 75,000 in cash, balance in 1 lakh 80,000 equity shares of 12.5 each. Wait, are they taking over all assets? No. Assets except which one? We are going to pay 5 lakh 75,000 in cash, balance in equity shares. B Limited also, we are going to take over only assets except cash and bank balances for 4 lakh 91,000. 16,000 in cash, balance 38,000 equity shares of 12.5 which is given. Both will be wound up. Liquidator will distribute shares of AB Limited amongst equity shareholders. Will pay preference shareholders 12 rupees in cash for what? Every share held. This is in the books of which company? Point number 4, point number 5 are in the books of which company? Selling company. How selling company is settling the obligations? Like that it is given. Then we made a public issue of 60,000 cumulative preference shares. 30,000 shares at the rate of 12.5 is given. Cost of liquidation will be 10,000 in case of A and 5,000 in case of B. Preliminary expenses of AB Limited will be how much? 24,000. Underwriting commission 38,900. Pass, prepare initial balance sheet, and all assets other than goodwill is taken over at what value? Book value is given to us. Goodwill, the balancing for we have to take it. Goodwill we have to take the balancing figure. Whether cash and bank balance is taken over? No, it is not taken over by the purchasing company. Cash and bank balance is not taken over by the purchasing company. Wait, most important, who has to bear the liquidation expenses? If nothing is given, liquidation cost has to be borne by which company? Selling company. What about preliminary expenses and underwriting commission? Preliminary expenses and underwriting commission should be in the form of which company? Purchasing company. In the form of in the books of which company? Purchasing company. Otherwise, liquidation cost means to close which company? Selling company. That cost has to be borne by selling company. And what about the underwriting commission and preliminary expenses? That is to form AB Limited or in the books of AB Limited. That entry will come in the books of what? Purchasing company. First, let us work out purchase consideration. Start. It is lump sum given. Okay, which company? Each company? A Limited, B Limited. Then consideration given. We are taking over all assets except cash. For A Limited and B Limited, all assets what? Except cash and bank balances. How much first company? 28 lakh 25,000. Second company 4 lakh 91,000. Consideration given. How this is given? In cash, how much is given? 5 lakh 75,000 given. For B Limited, how much is given? 16,000 given in cash. In shares, how many shares are given? 1,80,000 shares at the rate of what? 12.5. So total, if you add up, it will come to 28 lakh 25,000. Yes, please. Okay. 1 minute. So 28 lakh 25,000 is paid like this. For the other company, how many shares are allotted? For the other company, how many shares are allotted? 38,000 shares of 12.5 each. 38,000 shares of 12.5 each. How much? So add both, you'll get 4,91,000. So purchase consideration, we are not working out. That is given in the question. And please remember, we are purchasing only what? Assets. So it is amalgamation. Start. Let us pass journal entry. Examination in the model follow பண்ணாதீங்க. Classroom purpose it is okay. I'm just doing columnar format. For A Limited, for taking over which one? Start. Business purchase account data to liquidator of A Limited. How much? Take it up along with me, don't wait. 28,25,000. Then in A Limited, what are the assets? A Limited, what are the assets? Patent, building, plant and machinery, furniture, investment, stock and data. Patent, building, investment, sorry, plant and machinery, furniture also there. Investment then. Are we taking over cash and bank balance? No. Debit all the assets. Everything taken over at book value only. What is the book value? Patent. Then, then leave a line gap. That is maybe for goodwill. 2. No liability taken over. Only assets are taken over. Clear a word use பண்றோம். Business purchase. Balancing for will be goodwill. Take it up. Don't wait. Please take it up. 15,000 goodwill in the first company. Then we settle the purchase consideration. Liquidator of A Limited account data to equity share capital. Equity share capital 1,80,000 into 10. 18 lakhs only will come. Premium will go to the separate account. So securities premium. Securities premium the 2.5. 1,80,000 into 2.5. Then to cash or bank 5,75,000. For taking over B Limited, another set of entries we have to pass. What are the assets in another set of in this one? Motor car இருக்கு. Motor car account data how much? 1,26,000. Furniture account data how much? 58,000. Then stock 2,40,000. Investment. Stock 2,40,000. Data எவ்வளவு இருக்காங்க? 70,000. So business purchase 4,75,000 na goodwill or capital reserve. 4 lakh goodwill or capital reserve. Check பண்ணு 1,26,58 or 2,40,70 capital reserve. இதனாலதான் சொன்னேன் don't combine this. Because one acquisition there may be goodwill, another acquisition there may be what? Capital reserve. Assetsல போடும்போது வராது, but entry separate தான் pass பண்ணும். Because acquisitions are different, both are separate transactions. Equity share capital 38,000 into 10, 3,80,000. This is 38,000 into 2.5. Bank 16,000. It's not over. இன்னும் நிறைய இருக்கு. There is a public issue. There is a public issue given in the books of the purchasing company. There is a public issue. Look at this. A Limited made a public issue of 6,000 preference shares at a premium of 10%, 30,000 equity shares at a price of what? 12.5 கொடுத்திருக்காங்க. To 5% preference share capital to securities premium to equity share capital to securities premium. Take up this, then we'll proceed. It's issued at a premium of how much percentage? 10% or 60,000, or we can combine or pass separately also. Equity shares 30,000 into 10 will come to capital value, and the 2.5 will go to premium. This is public issue. Not over. One more thing is there. What is it? You have to pay the preliminary expense and underwriting commission. How much preliminary expenses? How much preliminary expenses? 24,000. Underwriting commission? 38,900. Now we have to prepare the balance sheet, closing the problem or material. Based on the 7-8 entries that we passed, you have to prepare which one? Balance sheet. Try பண்ணுங்க பார்க்கலாம் next. Never look at the problem because that will have old values. We will take wrongly that credit as reserves and all. Whatever is recorded in our books, these will come as assets. No liability. No liability. Why? No liability is taken over. Cash balance also not taken over. Try பண்ணுங்க. Try the balance sheet. Any doubt in it? Tell me. goodwill balance sheet 15,000 will appear. Old balance irrelevant. The capital reserve 3,000 will come in the balance sheet. Try பண்ணுங்க பார்க்கலாம். Take up this and try to prepare the balance sheet. That liquidation expenses should be borne by which company? Selling company. This goodwill and patent will come as which one? Intangible assets. Have we taken up this? Or live online friends, have we taken up the journal entries? Start with the balance sheet. Shall we? Balance sheet போடலாமா? What will be the share capital amount? Purchase consideration for the first company. Capital part alone. Purchase consideration for the first company. Then purchase consideration for the second company. Then public issue. Okay, we have got equity share, preference share capital. Then public issue, equity share capital is also there. Total 30,80,000. All only the capital part will come. Then reserves and surplus. All securities premium. Okay, purchase consideration. A pay பண்ணும்போது what is the securities premium? 4,50,000. Purchase consideration of B. While paying that, what is the securities premium? 95,000. Public issue. Public issue, we have got two securities premium. This 60,000 plus less preliminary expenses and underwriting commission. Totally how much? 62,900. Net amount will come. Ah, yes, correct. Capital reserve also will come. In acquisition of B Limited, how much is there? 3,000. No other liability. No other liability. Fixed assets. There is plant, property, equipment, tangible, intangible. Tangible assets என்னென்ன வரும்? This building, plant, furniture, motor car of both the company as per the journal entry request to add. That is, what is it? What and all will come? Building, plant, furniture, motor vehicles. Investment separate out. Then the patent and goodwill will come. How much tangible assets total? Other than investment, okay. Building, plant, furniture, motor vehicle of both the company. Journal entry padi add பண்ணுங்க. Example, you must do a proper working note. Here it is okay. What is the total? Simple. Building, plant and machinery, furniture, motor car, and the other one furniture. Then this is patent and goodwill. First company we have got patent as well as what? Goodwill. Then intangible assets over. Then investments. Investments are there in which company? A Limited how much? 1,55,000. Inventory of A Limited plus B Limited. The stock plus this stock. Trade receivables of A Limited plus B Limited. Trade receivable of A plus B. Cash and cash equivalents. Let us do the working note. Cash and cash equivalent. We are not taking over old cash balances. So, but we collected money in public issue. Public issue, total money collected. Journal entry irukku paru. 10,35,000 we collected. Less purchase consideration in cash for A. How much we paid for A? 5,75,000. Less purchase consideration in cash for B. 16,000. Less preliminary expenses, underwriting commission. All these things are paid in cash. So closing cash and cash equivalents will come. That is. Last எல்லாமே tally ஆகும். Example தான். Okay, it's a very good question. It's a very good question because they are taking over only what? Assets, except which one? Cash and bank balance. Purchase consideration is paid by which method? A lump sum method they have given. So this we have done in the books of which company? Purchasing company. 3 problems you had to do in the books of which company? Selling company. This question and 2 questions we left on one page gap. We'll have over 10 minutes of break. Or 10 minutes of break. Then we will continue with which one? Recollecting journal entries in the books of selling company. Then applying this in question number 5. This is lengthy. Compared to the other question, this is what? Lengthy. We have equity shareholders. We have preference shareholders. Cash and bank not taken over. Liquidation expenses we have to pay. Selling company, liquidation expenses we have to pay. So in this question, too many transactions will be there. And creditors also we have to pay. The liability is not taken over by the purchasing company. Selling company, we have to pay what? The creditors, liquidation expenses. So preference share capital is also there. So it's better to use this question to learn which one? Selling company. Okay. So I have a break or 10 minutes of break. Then we'll continue with which one? Selling company's books. Start. In the books of which company we are going to do? Selling company. See, in the books of selling company, we'll open a realization account. Which account? A realization account to record all the transactions. Let me recollect the journal entry. Then let us go for, ledgers and the books of selling company. See, in the books of selling company, all are recorded through an account called as which account? Realization account, where we will transfer the assets to realization. Please transfer assets at book value, only then it will close. While preparing realization account, ensure that you are transferring assets at what value? Book value. Transfer cash and bank balances only when it is taken over by the purchasing company. The last question, okay, what are the assets you will transfer? What are the assets you will transfer? Patent, building, plant, machinery, furniture, investment, stock, debtors, you will transfer. Will you transfer cash and bank balance? No. Why? It is not taken over by the purchasing company. Then, don't transfer any P&L account debit balance or miscellaneous expenditure. So what is the entry we'll pass? The realization account, it out to which account? Sundry assets account, like that, we'll pass an entry. Then, we will transfer the losses, miscellaneous expenditure and all to whom? equity shareholders. Now let me apply this in this question. So for this question, we'll prepare which account? Realization account. In the books of A Limited, let me do. You can copy it later, pay attention, just pay attention. The books of which company? The books of A Limited. The books of A Limited. We'll prepare which account? Realization account. We'll transfer assets. Examination, don't use sundry assets. In classroom purpose, it is okay. All assets other than the cash and bank balance. Patent, we can transfer. Plant, machinery, furniture, investment, stock, debtors, everything we can transfer. At what value? Book value. If there is a P&L account debit balance or miscellaneous expenditure, don't transfer. So 29 lakh 50 minus 1 lakh 40, how much we can transfer? 28 lakh 10,000 we can transfer. This is first one. Shall we? What is the second entry we pass? Then we'll transfer miscellaneous expenses and debit balance of P&L account. In this question, it is not there. Then transfer external liabilities to realization. In this question, what is external liability? Only one external liability is which one? Creditors given. We'll transfer this to which account? Realization account. External liabilities account data to which one? Realization account. This also will be at book value. This also will be at which value? Book value. By creditors. Book value 91,000. We transfer external liability. Next. Next. For purchase consideration due, purchasing company account data to which account? Realization account. Purchasing company has to pay towards realization. Then whatever we receive, we'll record in purchasing company. So in the question left, we'll prepare purchasing company account. We'll prepare which account? Purchasing company account. Purchasing company account data, which account? Realization account. What is the first company? Purchase consideration. This one. Lump sum money. 28 lakh 25,000. Then this the realization it will come as by A Limited account. AB Limited account. Okay. AB Limited account for the purchase consideration due. 28 lakh 25,000. So purchasing company account is nothing but A Limited account. Then how are we getting this? By AB Limited. How are we getting this consideration? By cash. How much cash? 5,75,000 in cash. Balance in shares. By shares in AB Limited. How much? How much? The balance. Yes, premium. Only in the books of the issuer, we will record premium and the face value separate. In the books of the receiver, we will record it total. Because for the receiver, it is like an investment, total amount. Okay. So once again, I repeat, we transferred assets, we transferred liabilities, purchase consideration due, purchasing company account data to realization. We get this in cash and shares form. Next. We transferred assets and liability, purchase consideration due, everything is over. Next. Okay, we transferred external liability, purchase consideration due, we got the consideration. Next, sale of assets not taken over. The question is the sale of assets not taken over. The question is cash is not cannot be sold or will not be sold, need not be because it is in the liquid form. Any other asset not taken over, we have to sell. No such thing. Then settlement of liabilities not taken over and liquidation expenses. What is the entry we have to pass? Realization to cash or bank. Any liability not taken over, we have to pay. Or realization expenses, we have to pay. A realization account data to cash or bank. In this question, only assets they have taken over. Liability they have not taken over. Which one? Creditors they have not taken over, we have to pay. As well as liquidation cost we have to pay. What is the liquidation cost of the first company? 10,000 has to be paid. We have to pay. So how this will come? How this will come? Realization of creditor to cash or bank for paying creditors. How much we are paying to creditors? First company or creditors பாருங்க. About 91,000 சொன்னீங்க. Second year பண்ணிட்டீங்களா? So first company or creditors 60,000. Pay the 60,000. Realization to cash or bank for expenses. For expenses 10,000. 10,000 you have to pay. Okay. So we paid realization expenses. Okay. What is the next one? We transferred assets, we transferred liabilities, purchase consideration due potential, purchase consideration is also over. Sale of assets not taken over, cash accounted out to which account? Realization account. Settlement of liabilities or realization expenses, realization to cash. For settling preference shareholders, first transfer preference share capital to preference shareholders, then pay them. Then pay them. The question, we have preference shares of 10 each, how much? 5 lakh we have to transfer. Look at how they are paid. Point number 4. Preference shareholders are paid. Okay. How much? 12 rupees in cash for every share sold in கொடுத்திருக்கான். A limited la பாருங்க. How many preference shares are there? 50,000 preference shares are there, we have to pay. Next. Let us prepare preference shareholders account. Which account? By preference share capital, how much? 5 lakhs. But how much we are paying to cash? 50,000 into 12 rupees we are paying. For each preference shareholder, how much we are paying? Look at this. Liquidator Away Limited will pay the preference shareholders 12 rupees in cash. So pay 12 rupees. 6 lakhs we are paying. See, capital is 5 lakhs, but we paid how much? 6 lakhs means excess will be adjusted in realization. What is excess paid? 1 lakh. The balance excess paid will be adjusted in which account? Realization account. In the realization, it will come as to preference shareholders account, that excess money paid. What is excess money paid? 1 lakh we paid excess. Now we settled everybody. We transferred assets, we transferred liability, purchase consideration due was there, and the purchase consideration received was there. We paid creditors because it is not taken over by the purchasing company. We paid for expenses. Then we paid preference shareholders. That excess payment is getting adjusted in realization account. Who are left out? Equity shareholders are left out. Let us prepare equity shareholders account. Equity share capital first company. Equity share capital, how much is there? 15 lakhs. By general reserve, first company, how much is there? 7,65,000. Then by P&L account, 1,25,000 P&L account. Any other reserve? No. Then at this point, we can close which account? Realization account. Realization account tally பண்ணுங்க. You may get profit or loss because we have settled everyone. Even preference shareholders are settled. Close realization account. I hope there is a loss. Loss இருக்கு. That loss will be borne by whom? Equity shareholders. Loss or profit? Profit நினைக்கிறேன். How much loss? $95,000. This loss has to be borne by equity shareholders. To realization loss. How much? 95,000 borne by equity shareholders. If you tally equity shareholders account, you will know how much to be settled. Balance all over. How much balance we have to pay? 23 lakh 90 minus last 95,000. How much we have to pay? 22 lakh 95,000 we have to pay. How to pay? We got shares in AB Limited. How much shares we got AB Limited? Shares in AB. How much we got? 22 lakh 50,000 we got. But how much we have to pay? 22 lakh 95,000 we have to pay. How to pay 22 lakh 90? Balance will be paid in cash. Balance will be paid in cash. How much it will be there? 45,000 should be there. Let us cross check. Cash balance. Opening balance is taken over or left with us? We are in the books of selling company. Opening balance is left with us. What is opening balance? This 1,40,000 is left with us. Add purchase consideration received in cash. How much of cash we got in purchase consideration? 5,75,000 less creditors are paid in cash. Creditors we paid in cash. How much we paid? 60,000 less liquidation expenses borne by A Limited in cash. How much we paid in cash? 10,000 we paid in cash less preference shareholders paid. How much is paid to preference shareholders? 6 lakhs is paid. Balance given to whom? Equity shareholders. If you want, you can prepare in the form of a cash account also, or you can do a working note also. 45,000. That is what is this 45. I repeat the whole process. Pay attention. First, we transferred assets to sundry assets. 28 lakh 10,000. Why 28 lakh 10,000? We will not transfer cash in this question. Why? That is not taken over by the purchasing company because the cash balance is kept as it is. Then we transfer creditors by creditors. Then purchase consideration due. Purchasing company account data to which account? Realization account. Purchasing company account data to realization account. Purchase consideration due. How we get the purchase consideration? Cash and which one? Shares. Then sale of assets not taken over. In the question, no such thing. Payment of liabilities, yes. Creditors are not taken over by the purchasing company, we have to pay. Liquidation expenses, we have to pay. Then, preference shareholders transfer the capital 5 lakh. It is given in the question. Liquidators will pay 12 rupees per share. 6 lakhs we have to pay. Excess amount paid adjusted in which account? The realization account. After settling preference shareholders, close which account? Equity, there is a realization account. The loss is transferred to equity shareholders. In the equity shareholders account, their capital reserves and P&L account minus realization loss. Okay, we have to pay 22 lakh 95,000. How to pay? The shares will be allotted to them. How much will be allotted to them? 22 lakh 50,000. Cash you see, opening balance plus purchase consideration in cash minus creditors minus liquidation expenses minus preference share capital paid. Balance is given to whom? Equity shareholders. Always balance left with us will be the balance in which account? Equity shareholders. Take up this. This is in the books of which company we have done? Selling company. Which company? A Limited we have done. In the books of B Limited also we will do. It's a practice only, you know. In the examination, they will not ask this much. Either purchasing company or selling company only they will ask. Okay, for practice purpose, we'll do in the books of which company? B Limited. You are going to try in the books of B Limited. You are going to try in the books of which company? B Limited. After completing B Limited, we'll go to which one? That gap that we left for the first two questions in the books of which company? Selling company. B Limited, we'll transfer at book value. Selling company Puerto Rico, all assets will be transferred at book value, except which one? Cash in bank. Don't bother whether it is recorded in purchasing company or. You have taken this ledger? All these three? Live online friends, have you taken it? Okay. In the books of B Limited, okay, realization, no preference shareholders in B Limited. No preference shareholders in B Limited. Now, sundry assets, which asset you will transfer? 5,76,000 minus 20. Then, creditors, how much you will transfer? 31,000 creditors. Purchase consideration due. What is due? 4,91,000 purchase consideration due. Then, how much is cash? 16,000 cash out. Balance in shares, 75,000. Creditors have to be paid. Liquidation expenses have to be paid. What is the liquid? How much? Then transfer equity share capital. Of course, if we tally this, realization loss will come. Equity share capital, second company level, 5 lakh. Then reserves 45,000. No P&L account, right? No P&L account only 45,000. So we have to pay 4,75,000. Capital plus reserves minus realization loss, we need to pay how much? 4,75,000 we have to pay. How to pay? Shares in AB Limited. How much? 4,75,000. Cash will not be there. Opening balance பாருங்க. 20,000. Purchase consideration we got in cash 16,000. Creditors we paid how much? 31,000. Liquidation expenses we paid 5,000. Preference share capital கிடையாது. So no balance left. No cash balance left. That is why this balancing figure is settled in the form of what? Shares in AB Limited. It's 4,75,000. Balance is settled in the form of what? Shares in AB Limited. This is in the books of which company? B Limited. So assets other than cash is transferred, liabilities are transferred, then no preference share capital in the question. So purchase consideration due 4,91,000. We received 16,000 cash, balance in shares. We paid creditors because it is not taken over by the purchasing company. We paid liquidation expenses. Then transfer capital and reserves. Loss in realization is also transferred. We have to pay 4,75,000 exactly. Shares are allotted to them. This 4,75,000 shares are allotted to them. Cash balance opening plus receipt in cash minus creditors and liquidation expenses. It became what? Zero. Then which question we left in the books of selling company? First question. Go through the first question once again for 2 minutes. The purchase consideration alone, 2 minutes go through. We will start. Shall we? Over, Nadu. Is it over? Live online friends, is it over? Okay. Question number one. In the books of P Limited, selling company, they ask you which one? Realization account. The books of which company? P Limited. I hope all the assets and liabilities are taken over, right? Even cash and bank balance is taken over. No. P Limited, like cash is not left, taken over. Cash is not taken over to sundry assets போடும்போது other than cash. To sundry assets other than cash. The 3,34,000. Look at what are the things not taken over. Data T limited are fully realized. Bank balance is retained by the liquidator. Sundry creditors is paid out of the proceeds. So the bank balance is not taken over. So out of 5,45, sorry, A limited, how much? 3,34, 54,000 is not taken over. How much will come? 2 lakh, 3,34,000. How much is not taken over? 30,000 is not taken over. So balance 3,04,000 taken over. Transfer liabilities. What are the liabilities you will transfer? Trade payables and creditors. Trade payables how much? 54,000 transfer. By debentures you have to transfer. Debentures book value. Everything book value. Only for the purchasing company revised value matters. Selling company, all assets and liability will be transferred at what value? Book value. Then creditors, liquidator தான் pay பண்ணணும். Okay, liquidation expenses, creditors யாரா இருந்தாலும் liquidator தான் pay பண்ணணும். What do you mean by liquidator? Selling company's liquidator will take care of paying. Then purchase consideration due to realization account. How much? What is the purchase consideration for the first company? 1,89,000. This will come as by PQ Limited purchase consideration 1,89,000. Then how are we getting this? By shares in PQ Limited, we are getting this 1,89,000. 1,89,000 we are getting it. Then wait பண்ணுங்க. Debtors realized in full சொல்லிருக்கான். By cash. Debtors realized in full. What is entry for sale of asset not taken over? Cash account data to realization. Debtors realized in full சொல்றான். What is the amount realized? Debtors how much realized? 44,000. 44,000 realized in full சொல்லிருக்கான். Wait பண்ணுங்க. Before we go for equity shareholders, let us check how much is available for payment. Cash balance left with us. What is the cash balance left with us? 30,000. Debtors realized in full சொல்லிருக்கான். What is the debtors realized in full? 44,000 realized in full. What is the creditors we have to pay? 54,000 we have to pay to the creditors. Creditors to be paid. How much we have to pay? 54,000 we have to pay. No balance இருக்கும். Balance will be given to whom? Equity shareholders. Balance will be given to equity shareholders. The 20,000 will be given to equity shareholders. To cash or bank. That credit has to be paid. Credit has how much we have to pay? 54,000 we have to pay. Then tally the account. Tally the account. Balance we can transfer to realization. Sorry, equity shareholders. Balance profit will be transferred to whom? Equity shareholders. The profit will be transferred. 3,97,000 minus 3,58,000. I'll recollect once more. I request you to listen. I'll recollect the entire thing once more. In the equity shareholders account, the equity share capital. What is the equity share capital belonging to them? What is equity share capital? 1 lakh. 40,000, 1,40,000 belongs to them. Then by P&L account belongs to them. How much? How much? 30,000 belongs to them. Then by realization profit, how much? 39,000. Total, how much it comes? 2,09,000 vrum total. Total is 2,09,000. How to pay this 2,09,000? How to pay this 2,09,000? We can pay to shares in PQ. How much shares in PQ we got? 1,89,000 we got. Okay. What is the cash balance left with us? 20,000 left with us. That also we can pay. To cash, how much we can pay? 20,000 we can pay. Totally it becomes how much? 2,09,000. Totally it becomes 2,09,000. I repeat once more, everything, pay attention. To sundry assets, how 3,04,000? To sundry assets, how 3,04,000? All assets other than what? Cash. Why not cash? That is not taken over by the purchasing company. So we transferred. Then liability side, creditors and debentures. Please remember selling company which value to transfer? Book value. Trade payable and credit debentures we transferred. Purchase consideration due. PQ limited account data to realization. Then we get shares in PQ 1,89,000. Then we have to get the money from debtors. What is the entry for sale of assets not taken over? Cash account data to realization. It's given. Clearly mentioned in the question. What is given? Debtors are P limited realized in full. Bank balance to be retained by liquidator and sundry creditors are paid. Which means we are getting cash from debtors. Then we are paying cash to whom? Creditors. For assets not taken over realized Achana, cash to realization. Liabilities paid by the selling company, realization to cash. Opening cash balance plus debtors realized minus creditors paid. Balance is payable to whom? Equity shareholders. Balance is payable to equity shareholders, yes. Then we close realization account, we get a profit of how much? 39,000. Capital, P&L account, realization profit 39,000. Totally 2,09,000 we have to pay. How to pay? We got this shares in PQ 1,89,000. The balance left in cash will be given to whom? Equity shareholders. This is the books of which company? Selling company. Now what I request is take up this. Then try in the books of which company? Srishti Limited. At home you try it in the books of Srishti Limited. Tomorrow when we start or we continue with amalgamation, we'll do which one? The Srishti Limited selling company we'll do. Then balance, how many questions are there? I hope we have done up to which question? Question number 5 varaikku pannirkom. How many questions are left? Second order selling company we have to do. Then sixth question we will do. Seventh question also we will do. Plus 8th question we'll do 6, 7, 8 we will do. Apart from that, listen, apart from that, we'll also do the latest question paper, like last 3 question paper questions we will do. 6, 7, 8 we will do. Then latest 3 examination question paper we'll do in the next session. Okay, but try for the second question in the books of which company? Selling company. So tomorrow that we'll start. Then we'll go to which one? 6, 7, 8. Then we'll see the past exam questions also. Take up this.